Hello, this is the Chartprofit video, Friday 13th of May, just about market open. Looking first of all at the New York breadth chart with the daily breadth indicators through Thursday. We talked about the divergence between the breadth indicators themselves and the price at the top here, advancing to new highs while the indicators lower highs, giving that negative divergence. It seems to be playing out in the price action here. And while the bottom two indicators here are holding above the levels that I consider supportive for the market, the top indicator here, the net volume percent 10-day moving average, is approaching oversold level here. Because these two are holding their levels, the pulse chart, if we look at the daily breadth line in the middle here, has managed to stay green. Price momentum itself is still tailing off, and is actually on the daily chart has moved into negative territory, so we want to see this at least moving back up, preferably green, i.e. above zero. Will likely only happen if the market starts to move back up itself in price. Where we start to get concerned, of course, is if the breadth goes back to red over here. This stays below zero, remains red, and then we start to see some significant selling or red being marked up here. We have seen over the past few weeks just very minor selling here and here, these red bars, but they were at a time when the price momentum and the breadth at the bottom here look pretty positive. You can see from this point here, let's draw that a little better, you can see from this point here, breadth started to turn red and the momentum broke down, and technically weaker market, and the significant selling that was marked here, these red bars, leading to a sharp decline as everything kind of lined up on the bearish side. And one thing that would certainly make me more cautious, if we look at the pre-open today and the profiles recently, down here at 2041 we see the point of control, this major support level that I identified quite a while back, and we're looking for a sign of weakness, which would be one of these value areas, one of these daily value areas printed below this level. And you can see that currently, and certainly before this chart, the value areas hadn't managed to do that. We've seen a brief price probe below it here, but a value area generated entirely below that level would be an indication of further weakness. Just staying in here a second, on Thursday pre-open we said the very minor half range off the April high at 2068 in here. Dashed line, I said at that point the price relative to that level post-open on Thursday could be used as a guide to short-term strength and weakness. We opened almost exactly at that point, immediately sold off, so price action since then has been under that minor half range. Price back above that level, printing time up here would be a minor sign of strength, and as I just mentioned, price below 2041 would likely indicate more weakness. Just reviewing the sentiment first of all, looking at the RIDEX assets ratio. Still relatively low, close to 4. It's been tailing off a little bit this week, even as the market rallied earlier in the week. As I mentioned in the last video, should we see a sell-off here, should we see a sell-off, and we saw the RIDEX ratio breaking below the February low down here, that would be below 3. That would be a good indication of over-pessimism. It would be a strong contrarian signal. If we look at the bull fund assets in isolation from RIDEX, that's tailed off a little bit as well here. RIDEX retail traders had very little interest, as we mentioned in the rally, which was pretty bullish. We saw very little upside in the ratio from the low in February, and now we've tailed off again, showing they're becoming a little more worried than they were a few weeks ago. Elsewhere, we've got the public poll from AAII. Bulls percent was slightly lower at 20.4% this week. That's a 13-week low for the bulls percentage. Bears percent was higher at 31.3%. 4-week moving average of the net, the bulls minus the bears, has just dipped into negative territory again. This is pretty much neutral, I think. In the investors' intelligence, just slightly less bullish sentiment being shown this week. Bulls percent was lower, 39.2 from 40.2. Bears percent was pretty much unchanged. 4-week moving average of the net is the one that may be a concern. We've been watching this line here, the previous peak in that 4-week moving average, and that's been exceeded and it's still climbing. I've noticed that when we see a peak in that 4-week moving average, which corresponds to a previous price peak, when it's exceeded, it often marks the level or the point in time where the market will at least stall. The exposure index, which measures current equity exposure of active money managers, has come quite sharply lower. It's currently this week at 49.55 here, and that's down from 82.5 just 3 weeks ago. This is money managers poll, but again a contrarian indicator. We've noted over the months that the best buy signals come below 30, which is quite a way down still. The sentiment indicators so far kind of unclear, maybe neutral. This one, the Lipper US fund flows, they reported equity fund including ETF outflows this week, the week to the 11th of May, at a negative 6.1 billion. 4-week flow in black here is at this level here, which is relatively low. The last two market lows, important market lows, have come with that 4-week flow number lower than it is currently. We'll look first of all at the currencies. We're looking at the supporting charts. This is the dollar index itself. Earlier in the month we saw a test below the August low. That was rejected, and we're coming back pretty strongly here. The important point here is that the major resistance at this point is the 2-year time resistance at 94.79 here. Dollar's having a very strong day today on Friday, and we're heading up towards that resistance. Time spent above that resistance would put the dollar index back in a strong price location. We'll wait and see. Correspondingly, on the Euro FX chart, we're having a pretty weak day here, but there is major support. The 3-year time support is here at 111.98. I'll show you that level on the distribution chart. It's here. We're looking here at a 30-minute price distribution, the Euro FX, from September 14. So on the left here, here's the point of control, controlling price, and the high of that value area, you can see here, of that distribution comes in at around 114 up here. So we've seen a probe above that level, and we're back below it now. Time spent in here, roughly where we are at the moment, between the point of control and the value area high. In other words, if we put time in here, it may lift that controlling price higher, which would in turn lift the value area higher. So it may be that until, or if that happens, we see at least a stall in this chart. So my guess is one or two things will happen. That point of control migrates slightly higher, which will lift the value area and give it room to move higher, or we'll see price back underneath the controlling price, which would certainly indicate further weakness. Just mention that I have no movement in the important levels apart from one, which is on the TLT. We'll come to that later. So we're looking here at the British pound, and the level remains the 8-month, the important level at 142.60, which is here, big support. With the dollar strength today, we're seeing weakness again in the pound here. Seeing the same thing with the Aussie dollar, lower against the dollar. As we noted recently, the major point of control is up here, spot 76.50, this line, this thicker line here, and the more recent level of importance, which is the 2-year time resistance, spot 77.68. That was probed up here and immediately rejected when price came back underneath. That was weakness. So we're seeing sharp decline here for the Aussie dollar, and the best support I have is the half range off the low in January, and that has been broken today. So this is in a particularly weak price location now. So I wouldn't be interested in the long side of this chart. Minimum, you want to see it regain that halfway point off the low. That's an important low, that's an important halfway. Okay, as I recall, we're about 15 minutes after the open. I've got a couple of European charts before we look at the US to give them time to settle in. This is the UK FTSE 100 chart. Quite encouraged back in April when we saw some time being printed above the halfway point off last year's high. The chart sank a little bit underneath it, a little bit of consolidation, and then we probed down to the 12-month time resistance, time support at 61.39 on this chart. Currently we're printing underneath that level in a weak price location, so I would be much happier to see this chart back above 61.39. The major support, of course, is lower here at 58.70. That's the major time support. The corresponding major level on the German DAX is at 97.40. And currently, following the decline recently, we are seeing a stall at this level and some support. So price back underneath this level would certainly be a weak location and suggests further weakness. I'm kind of hoping that the DAX will find some legs here. This would be a good chart to follow going into next week. Okay, this is the T-bond ETF, TLT. In the big picture, you can see the big level is the major down here at 117.15, which was probed here. Just quickly reviewing, so the next most important level off this high to this low is the halfway point, and all the action since we broke above that level earlier in the year has been above that level and holding. So in the big picture, all of this is strength. And if I just zoom in, you can see that the 8-month, and this is the level that's migrated this week, the 8-month controlling price has moved up to 130.77, just in there's a little bit of price action here. So this in the short term, good level to monitor on this chart, and actually today we're printing above that level and above the halfway point of the recent high. So this is strong price location for TLT. Wouldn't be interested in the short side of this chart unless we see price here now. Looking at the gold shares ETF, GLD, sorry. Major controlling price moved up to 118.22. Then we briefly found support at 115.50, which was the previous point of control, and now we're back above the major in mid-April. Currently we're in a strong price location here. As long as the chart holds above 118.22, be looking at possibly adding long positions on short-term oversold. That would be something like the stochastic momentum index at the top here going below 50. 9-day relative strength index dipping below its lower Bollinger Band here, which I set at 40 periods. Last time that happened was late March. That would be doubly interesting if we saw the dollar index finding resistance at that level previously discussed. This is USO, the oil fund ETF. Just coming up off the low from February, we saw a retracement from this point down to the previous point of control, which was here. The previous, I think that was the 6 months at that point, found support, which was good, rallied, and as we noted last week, in this period here, the 6 months migrated up to 1078. That is now the level to monitor for support, and since that point of control migrated higher, which was about a week ago in here, we've held that and actually rallied up to just a partial new high here, and doing pretty well at the end of this week. So oil looking pretty strong. Okay, we'll look at the stock index charts to finish. Quick review of the important levels on the E-mini. Major support at 2041 down here. Resistance levels being the minor half at 2068, the dash level here, and 2086, the 1 month point of control. So those levels on the current chart here, you can see the probe below the resistance at 2041. Value areas holding above that level. You see currently we're holding above, and that minor half range comes in here at 2068. Just price back above there would be a minor positive. Price currently, as I speak, printing around 2059, something like that here. You can see that the chart this week has spent some time here at 2056. The reason I mention that is that in the last webcast a week ago I showed this chart, which has not been updated. One of the levels that we mentioned, I talked about, was 2056 here, along with 2028. I mentioned that these two would be possible levels to attract time, and the reason for that and why that would be a negative is because currently, as we know, the point of control is at 2041, which is here. And from my way of looking at things, that's currently implying a target price above the recent high. But if the point of control, or the controlling price of this current distribution, moved to 2028 or 2056, that would have entirely different implications. So I think we're away in terms of time printed from that happening, but I prefer not to see too much time printed at that level, 2056. Okay, here's the spider chart. Recently the probe above the major point of control up here at 209.90 was rejected. That's a little worrying. The 5 month is the next important level, which emerged in here, and that provided support. So quite clearly this is a good chart to follow. Price breaking below here would have negative implications. Price breaking out up here above the major, I just zoomed out there, above that major level there, would look very positive. The Russell 2000 ETF IWM does concern me. We approach the major up here, and that area of price anywhere from 115 to slightly above that level. I think we just reached 115 here and you immediately turned down. This dotted line here is the halfway point off last year's high, and we're currently printing over there. In my book, this is weak price location, and I want to see the chart quickly recover minimum that halfway point. So I'm kind of concerned about this, especially as when we look at the other stock index charts. You know, they're very close to support. For instance, here on the diamonds, price back below this 2-year here would be really weak price location. So if all these charts start breaking down together, the diamonds, the spider, and here the Q's below its major at 105.13, which is that red line, and also the halfway point off this high, all these charts start breaking down below these support levels at the same time, I fear there might be quite a quick sharp sell-off. Currently though, at the end of this week, they appear to be holding. Let's hope that continues. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.